Bigger surface in the United States and the odds that the market could go higher. Jerry Gidel is ready to weigh in on that right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, the USDA has increased some of the surface in the United States. How does that play along?
Oh yeah, we had lots of information out today on this June 30th. It always does have some excitement just because we're looking at the revised U.S. plannings and that's impacted by weather sometimes, prices, things of that nature on what producers hoped they were going to do back in March and things, but things time we get to June sometimes change. And also, of course, we get another update on the quarterly grain stocks, which is also kind of a measure of looking at how things on the demand side are, and it's also kind of a check on the size of last year's crop. So in both those cases here, we had some very dynamic numbers here that came through today on things. At this point, the uh, acreage reports really, I think, grabbed the most attention today with the soybean number uh, on acreages being 4 million less than last year's number, and kind of really that the trade was looking for. Some were looking for a slightly higher number here this time around, and at the same time, the corn planting numbers, which were also up already, and that because of the strong corn prices in the country, 92 million, they moved that up to 94.1 million. That's 2.1 million. That's pretty dynamic shifting around here in the major corn belt states, which dominate these USDA's numbers. To have that kind of shift is kind of interesting this late in the season. But if you think about it, corn prices were real strong until really at this point back late in May, and the decisions had been already made about planning. It's kind of surprising in its own way, though, that there hadn't been some more commentary from the seed dealers about people asking for more corn seed and turning back in some of their bean seeds for the various fields across the Midwest. But kind of quiet. Didn't hear any of that kind of news ahead of today's report. But right now, at least, that's the reason why we had near limit up move in soybeans and a hefty 25, 30 cent break in corn here after the report was issued.
Yes, and now we know the size of the Argentinian crop uh, as well. So, what do you see that is going higher after all of this?
Well, yeah, definitely, we did finally get an updated, finalized number, and the ag ministry and the people involved continued to be looking at the Argentine crop at 21 million metric tons, and that's I think at least 2 or 3 million less than the USDA's current 24 million that they came up with and revised last month. The real key to this is that uh, that does suggest that despite some sluggishness recently here, and that some people around the world will be looking towards the U.S. for both meal and also soybeans here, because Argentina is not going to be able to provide those accordingly here in the short term. But the stocks report also plays into today's numbers on things. And on the soybean side here, since we're concentrating on that side of the market here right now, is the fact that the stocks numbers came in about 15 to 25 million less than expected here at 795 million from there. But the interesting thing about this thing is that seasonally we traditionally have the residual, which is the difference between the statistical numbers and the stocks numbers, seasonally kind of decline. So in essence, it's less of an impact on our stocks numbers, or excuse me, our ending carryover stock at this point. And traditionally, it'd be unchanged to lower, and instead it went up this month by a number closer to 25 to 30 up to 170 million plus versus the 150 we've had last month. And it's quite unusual to see that happen. That's a suggestion here that the last year's crop size was probably overestimated on the because yields maybe weren't as strong as the USDA had projected last fall. We won't have an official number on that until September when the crop year is over, but the USDA could make some adjustments here to try to indicate that be the case. The other twist of it is that because of the fact that we just mentioned that 4 million less acres were being planted this year, the current USDA's 330-40 million carryover stock for the coming year is going to be significantly set back here, because the quick figure on this thing, when you look at things in the world of soybeans, is it's about 50 to 52 bushels is our typical range for U.S. soybean yields. Well, if we take 4 million out of that, that's a quick 200 million off the 300 plus million number, or 300 million number. And we're right down here and close to 150, maybe even down closer to 120, 125, because of the fact that we had less of a carryover stock potential as we go into the final numbers this quarter. So soybeans took off like a shot out of hell here and went right up. It's 80 cents, and it looks like it could continue here, go forward at this point. But the corn market maybe is going to slow it down a little bit here with some of its data.
Yeah, and there is another factor playing out. Over there is the hog liquidation in the United States. A lot of hog producers are not making money at this time.
Yes, it's been a little bit of sluggishness in their prices, and that it's always amazing in the U.S. Meat preferences at this point. We really have a pretty tight beef supply situation because of the drought, which prompted many of our feedstock or cow and calf operations to actually have to liquidate because of the drought the last couple of years. So now all of a sudden we don't have as many animals to fatten up to have beef. But at the same time, we came in with a number here on things from the standpoint of about a unchanged number, but at this point it's been a tough go out there because we just talked about how strong the cash corn prices are, and now with the latest data here, there does suggest that last year's crop was maybe overestimated on the corn from there. So that's a tricky situation. It's kind of unchanged there, and with the cattle numbers being down, I think one of the real factors in this thing that indicated that even last year's corn yield could easily be overestimated, primarily because the seasonal corn usage that we used this quarter is back where it was back in 2019-20 here at over 1.1 million bushels during the spring quarter. And that doesn't really fit the bill here when you're looking at 2.5 to 3% down on corn. Cattle numbers in the feed yards, and then the other side of the question were, both poultry and pork were unchanged, so that it's not a total loss of U.S. feed demand, but having it go up in comparison to last year's numbers, they're around 850. That's 300 million more supposedly usage and feed. Now, why are we talking about feed? But this numbers off. Well, feed is also the place where the residual ends up being, in essence, the size of the crop of last year kind of gets forced into the feed number. So that's part of the reason why that this feed number is watched closely, because you got so much export demand, you got so much ethanol demand, and then if we're going to have this number that we come up with today on stocks at just 4.1 billion bushels, that meant that officially they were in the feed and residual, and the residual this quarter really seems pretty out of place comparison to what it should be, considering what we just discussed about livestock numbers here in the U.S.
In the extreme weather in the Midwest of the United States has some play in there as well.
Oh, definitely. That's part of the scenario that hit us here. We had some showers around, and the forecast was for some more moisture later this week. Actually, yesterday we had the second time in I think about 3 or 4 years here we've had a phenomenon called the derecho, which is a significant uh, thunder shower, dynamic wind situation developed. Last time it came in August, and it moved from Iowa, in central Iowa areas along Highway 30 all the way towards Chicago. This one developed in northern Missouri, southeast Iowa, and really the Quincy area in Illinois, and went down southwest, or excuse me, southeast. I can't even remember what direction I'm at. It went to the south east towards Terre Haute and Evansville, and wow, it was pretty dynamic there. It came through yesterday on the 3rd. Interestingly enough, the wind damage last time was quite significant, partly because of the fact that the crop at that time was significantly further along in it was basically past pollination. It was as the corn crop develops up ahead of pollination, it's a little more forgiving. And that type of thing. But once it starts to have pollination and set ears, it wants to be very strong and supportive of the ear. Well, at that point, this year we weren't there, so there's some damage out there, and it's uncertain. But the key thing is that the amount of moisture that came through on that particular event was only about, in most cases, an inch or less. There was a few places that had an inch and a half, but it really was not the big moisture provider as despite the 80 and 90 mile an hour winds that came with it. So that's the other twist of this thing. We still going to need more moisture. We're still going to need more rainfall coming through to stabilize out and maybe try to bounce back some of the stress we've had over the last couple, 3 weeks. Because here in Chicago, we were running about only 30-40% of normal during the month of June. Now, I guarantee there's not much corn that's actually raised in the city of Chicago, but it's an indication of what is things going on downstate. And there is some more rain out in the forecast. It's going to be a choppy in here. We've got a holiday in here next week, so there's definitely lots of things to limit some people's participation here. The corn side of things is interesting in the fact that with this most likely a substantial adjustment in last year's crop, and also the higher planted situation, and that's 2 million acres we really didn't need by any means. But I think the yield number, that 181, really doesn't make sense either. So I think there's going to be some big adjustments on this July 12th USDA production number. But at the same time, we probably will still have a bigger carryover being expected than the carryover that's most likely going to be down closer to 1.3 versus the 1.45 that's currently been projected out here in the U.S. So one side's got a little top heavy and got too many bushels, and the other side is really going to be scrambling. So the soybean side, if you think about it here, I realize Brazil has got a big crop and all that kind of stuff this year, but at the same time is that the U.S. Is also trying to expand its biodiesel slash renewable diesel and to slow down pollution. And right now, there's a lot of plants being built, and going down 4 million acres this year is not going to make available supplies of bean oil out there. So it's going to make a very, very interesting situation here in the dynamics between soybeans and corn.
Yes. So I will see you next week. Thank you, Jerry.
You bet. Well, it's at this point, we'll see how these beans react around $15. If they make it through there, things get real interesting. The corn side of things, we're right back down here at the kind of $5 level, and I kind of feel like that could provide some support as we try to figure out how this weather's going to turn out. But it's been a real roller coaster this last week.